Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, December 3rd, 2020. What we're going to do in this video is take a look at the some of the various international markets. I have a watch list of international ETFs, so we can look at both what those markets are doing, and these are also potentially actionable trade ideas or trade setups. We'll go through those. I like to do those every so often. The last update was on November 5th, so we're almost it's almost been a month, and I wanted to do another update. Now, in that video, as well as I believe the previous video, I know in that last video a month ago, we had the last high in the market right here. The S&P 500 was there. We were down somewhere in here below that high. And I stated throughout the video, I know at least during coverage of Canada, which is EWC, I think that's the second security, and at other points, and I've been stating that for a while, that my preference was I was leaning towards and kept talking about in the various countries a marginal new high. So I was intermediate term bullish, leaning that way. But as I've stated, the risk reward I didn't think was that great. It's not worth, my opinion. If you came in, if you've been traveling the world for 3 years and all of a sudden you came in, and I said, hey, I'm leaning towards more upside here. Again, the risk reward was not very attractive. The upside has been minimal. We did make that marginal new high, but we're only up about 4% or so in the last month. But what I mean by marginal new high, marginal can be anything from, and I'll state this, from a couple percentage points, maybe 8-10%, somewhere in there. That's what I refer to as a marginal new high. So to just recap, at that point in time, we were down here looking for a marginal new high, and nothing's changed. I think that's going to, we're there. We are there. Now, I'm not making a hard call. It's like my call on gold the other day. For the first time in 4 months since I posted exiting all my long-term gold positions and expecting a correction, I started buying back into gold. That is more of a, not a hard buy signal in gold. This isn't a hard sell signal in the market. In fact, we don't have any sell signals right now. As I'm doing the video, we're about to close the day, but what we could get, and this is why I do these videos in advance. Number one, I wanted to reiterate my thoughts that we're about there now. And so, if you were an aggressive trader or you want to start scaling in, I think a case can be made if you're, because with these divergences, I'm not looking for a short-term pullback. And I also separated that in the previous video on these international markets. I started out that one looking at the 60-minute charts, and I said, short-term analysis, intraday charts like a 60-minute chart. If I'm looking for a rally or a pullback, that's on a short-term time frame lasting maybe days to a couple weeks. This is more longer-term stuff, so I would want to just reiterate that and make clear that this is analysis where I think the market's likely to head in the coming months, 2, 3, 4+ months. And I think we're there. I want to talk about a little bit about the U.S. markets before I move on to the international markets. Lately, I have voiced my concerns. I have some long-term, very reliable indicators, sentiment indicators that are telling me that this market is overly optimistic, put-to-call ratios, things like that. And they're at levels before where significant corrections have happened. So those are there. On the flip side, other than sentiment being, I think, a little too bullish right now, it's really hard to knock this rally. I've talked about how the market leaders, Apple, Microsoft, Amazon, Facebook, those stocks are still well off their all-time highs. They've kind of stalled out lately. However, on the flip side, it's been the second and third tier companies, those smaller companies that have rallied, and we've seen pretty much broad participation in the 11 sectors in the S&P 500 as well. So from a market breadth perspective, the rally is, it's on solid footing. Now, I'm going to play devil's advocate there. So I am saying that, look, we have a solid, a decent rally right now going with not a lot of cracks in the rally. There are some indicators that are saying, hey, a little too bullish, maybe too much one-sided trade here. Not enough shorts in the market, not enough bears in the market. But what I wanted to point out is, there's an old saying on Wall Street. that says it's always darkest just before the dawn. And what they refer to is, think back, for those of you that have been around a while and were investing or trading back in the last bear market from 2007 to 2009. That was one of the biggest bear markets we've had. The S&P 500 dropped 55% into the early March lows of 2009. Now, at that time, it's not here on this chart. We're only looking a few years back. But it's just like the COVID lows. And, I remember it very well. The news flow was about as negative as it could be. And it looked like the world was coming to an end. There was no sight to the bottom, to the market bottoming anytime soon, but it did. And that's usually what happens. Same thing happened in the COVID lows. The March lows, where it looked like the world was coming to an end. Everybody was paranoid about COVID. Streets were empty. Stores were closed, blah, 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 blah. And that proved to be the best buying opportunity of the year. Okay, where am I going with that? Well, I like to say I have my own corollary to that, saying, which is it's always brightest just before dusk. And so right now, like I said, it's hard to knock this rally. Vaccines are coming out. They're already in play to get those in people's hands. Supposedly they're very effective. You're seeing, overall some upward trending in a lot of economic indicators. Housing market's been super strong. Interest rates are low, blah, blah, blah. So, and again, how much of that's priced in? How much of the shutdowns and everything that did end up happening in COVID was priced in, and then some. So the pendulum usually swings to the other direction. So I just wanted to say that for those of you that say, Randy, you're crazy. This is one of the best rallies. We're going to keep rallying into 2021. Maybe, because what I'm going to say one more time, and then we'll move on to the charts, is we have absolutely zero sell signals at this point in time. The near-term trend is bullish. The intermediate-term trend is bullish. So we don't have any sell signals. Now, what to look for? Well, sell signals can come in many forms. We could go, if we zoom down here on the 60-minute chart, a SPY. Here's a trend line on the 60-minute chart right here. Maybe that one cracks. There's some support levels. I haven't cleaned this chart up in a while, but we do have also negative divergences building on this 60-minute time frame, just as we have on the daily and the weekly. So I'll be watching. Sell signals can come in many forms: break of support, break of trend lines. They can come on candlestick reversal patterns. But one thing that tends to happen after an extended run is once there is a change of guard from the bulls to bears, you get a rush to the exits, and that's what you have to be aware of. And just one day, or during a correction, in just a week or a month, you can wipe out gains. And you did here. You wiped out. Look at all those candles that were wiped out in that first drop there, and then we continued to drop, and months of gains were wiped out in just weeks. And that's typical. When the COVID lows hit, you dropped from the all-time highs at the time in the S&P 500, and just less than a month, wiped out all gains in the stock market over the last 3.5 years. That was somewhat of an extreme, but here's a drop in 2018. Fourth quarter of 2018, which we saw coming, profited from. That wiped out all gains for almost 2 years. So, all right, that's the point I'm trying to make, and the reason I do these videos in advance, because you have to be quick. In a bull market, you can be slow. You don't have to buy at the right time. You don't have to be, there's an old saying, never attribute genius on your part to a bull market. Ideally, you want to buy the dips. If you're really good, you buy all these dips in a bull market. But there's studies that show you can be the worst market timer and buy all these highs, but in a trend like that, you're still going up. And bull trends go a lot slower than bear trends. So I do these videos to kind of let you get your ducks in a row. I know a lot of people out there, the majority listen to my voice, don't short. Majority of people are inherently bullish. The stock market does go up more than it drops, so you have to acknowledge that. So if you're going to short, you need to be quick, and most importantly, you need to be quick getting in, but you also cannot stay too late to the party on short trades. So I'll let you know when that time comes. And I think we're there, and I made it very clear that even though a month ago during that last video I stated that I was leaning towards more upside to a marginal new high, and that was my preferred scenario, and that's now what we have. So I think we're at that around within, I don't know, anywhere from 0 to maybe 10% of the top before we have a sizable correction. I'm talking double digits, more than 10%. That's where I think we're at, and I'll be waiting to see some type of evidence that the market has turned some sell signals. So that's more the micro stuff. I'll follow up with 60-minute charts of ES and SPY and QQQ and all that. I wanted to kind of paint the bigger picture on the global ETFs for both of those of you that are in those countries. If you want to know what your global markets look like, or your local markets look like, as well as US and based investors, because these are all ETFs that track those markets that trade on the US exchanges. So you can buy them at TD Ameritrade or Interactive Brokers or Fidelity or whoever you're using. Okay, on to the charts. We're starting out, since the US is an international market, that's the one that's on top of my watch list here, and most other, especially the developed countries, will follow the US. I'm talking Canada, the UK, Australia. They're going to tend to go up and down with the US. And you can see here over the last several years, going back, you can roll back as long as you want, almost all the biggest drops. That was that big fourth quarter drop, nearly 20%. There, other indexes did drop more than 20%. It was preceded by negative divergence on both the PPO and RSI. There was another big correction, probably double digits, divergence there on the PPO. So you get the picture that divergences, it's not a 100% guarantee for a correction, but as I often say, much more than often they do play out for a trend reversal, and now they're here. So where we didn't have, when I did the last video, we had some divergence here on the PPO, and sometimes that's all it takes, but we didn't have it on the RSI, because at the time this was our peak in the RSI, and so that's why I was leaning towards, instead it would make a much better setup for a short trade, a swing short, good correction that you can get short and hold on for probably weeks, maybe even months or more. And now that is here. Now we have that negative divergence on the RSI, and the divergence on the PPO has only extended from that point. So there it is. We're about where I figured we'd get to before this thing starts to run out of steam. Hey, we can still continue up. That's the thing about divergences. I always say they're not sell signals. They're an indication you'll likely get a trend reversal. But what happens is sometimes they build and build and build, and sometimes they continue to build until they're gone, and then you can power through there. As of now, the market could certainly push up, a little bit higher for days or weeks, maybe even months, and keep these divergences intact. And the other thing, QQQ, the NASDAQ 100, let me flip to this board. Same thing, back at the time, we didn't have any negative divergence. Didn't have it here on the RSI or the PPO. Now we do. So that was another thing that was factored into my analysis, looking for that marginal new high. Now we've got it. We have it on both. These are the two big cap indexes I like to watch. The Dow, it's only 30 stocks, so I'm not going to really cover that often. Much more diversification in the tech heavy. And these are where today's stocks are, tech stocks. This is the economy we're in 2020. This isn't 1957 anymore, where Ma Bell, AT&T and General Motors, and those were the big companies to have. Now it's the tech-heavy NASDAQ 100, the Teslas of the world, Apple, Amazon, Facebook, Microsoft, and those are also components in the S&P 500. This index tracks those, has a higher weighting on there, so you can really see what's going on in the tech sector. And so just to recap, we now have that marginal new high. Not to say we can't continue to push it up, but it is there. And there's a nice little uptrend line forming on QQQ as well that could do the trick. So I'm on the lookout now. And if we start to get those sell signals, it's a lot like the gold call I made earlier in the week on Monday. Time to start getting back into gold. It wasn't a hard buy signal. I give you a zone. So it could go a little lower, or this could be it right here. And that's kind of where I'm at in the market. So if you are an aggressive trader, you could start layering into shorts right now. Like anything, use stops. I think the upside's minimal. Where your stop is going to be dependent on where you think the market's going. At minimum, I think a nice target would be the bottom of the recent trading range on QQQ and SPY. So if you're going to do that, let's just box it in here. It's probably better to find on SPY. Yeah, there we go. We'll look at that. So let's just say that you want to swing down to the bottom of this range again. So then you have to measure that out. What would that be from where we're at right now? You're targeting down to about 322 and change. It's about a 12% drop. So you might only want to use maybe a 4% stop loss to keep a nice 3-to-1 risk-reward ratio. If you think this is a major top coming up soon and we're going to head down quite a bit more, your target might be 20, 30, 40%, and then you might allow yourself a little bit wider stop. Or the safe bet is wait for the sell signals to come. Unlike gold, that call with gold was made. I could make a stronger case to buy gold on Monday because we were at the downside target that I've had laid out on that weekly chart for months now, and we hit that, and it was a support level. We don't have resistance on the S&P 500 or the Nasdaq 100 because they're at all-time highs. You've never traded there, so that you don't have any price resistance levels in which to short a rally into resistance. That's why we need to wait for some other type of sell signals. Okay, onward we go. That was really coverage of the U.S. markets, as well as the same things come into play, and this is what I covered in these in the last video a month ago, where we were at in a lot of these markets, these international markets. This one's EWC. If I don't make mention, I'll try to mention each one. There's the symbol right there, and there's a country that it tracks. So here's our neighbor to the north, Canada. And you can trade again if you're, U.S. If you're in the U.S., this is an ETF that trades on the U.S. exchanges, EWC, and there it is. You got that marginal new high that I was leaning towards, and it also comes in a run into major resistance. Look, this is where Canada has capped out every time over the last at least, forever. That's all-time highs. I said I'm not going to look at the weekly charts, but I'll do it here. No, take that back. I'm sorry, guys. Canada right here, this is where it's rallied into, and this has capped all advances in recent years. When I look at this weekly chart, we do have higher highs there. In fact, Canada, peaked and way back here, 2007, and at least via this ETF. And so far, we're not making lower lows, but we're making these equal lows right here, and that's where we're at. So whether we ultimately break above this level or not, you say what you want about where you think it's going. All I can say with absolute certainty, it's pretty significant resistance, because every time we got up to this level before, EWC fell, and those are pretty big drops from about 31 where we're at now. Down here we dropped about 23. From there we fell 31 all the way down to about 17 and change. So we almost got chopped in half right there. And there we are. We're there again. And if you see things glass half full, you're an optimist, you might say, okay, well, we're going to break out to new highs and run. And hey, a breakout above that level would be bullish unless it fails. So you get a little pop, it's still going to be a divergent high, and because of these divergences, that's why I suspect that it will fail. If we didn't have the negative divergences, we consolidated for a while, maybe they burn through, we might pop it and run. But I think the upside in Canada, like the U.S., is limited, and you can actually make a case with Canada to go ahead and short here on EWC because you are at resistance. So you put a stop somewhat above and pick your target. This hard to say where we go right now because we haven't even put in the top yet. So I'll be doing this video if the markets continue to hold up, climb, trade sideways for the next month. I'll follow up again with the same video in a month, and if anything changes and my outlook changes, both fundamentally and technically, then I'll let you know if I think it's time to go long and catch another leg up on these guys. But as of now, I'm more concerned of looking for sell signals, and you can see some of these. You can draw a pretty decent uptrend line right there, and I'm sure if I go down the 60-minute charts, there it is, just like the U.S. markets. No surprise, you're seeing some negative divergences forming right there. There's your divergence line. You have a little trend line there, which will probably spark the selling. I think that's the trend line I'd use. And a minimum pullback for EWC is right there, about 20. That's again a minimum 29, 21 or so. All right, we're going to go through the rest of these faster. I don't want it to be a 45-minute video, so we'll just rifle through these. EWG, this is Germany. What stands out? Well, we have extended the divergence. There it is. We had divergence at this previous high. We had a nice sell signal on the wedge break right there. That was our correction. We rallied back up, and the same divergences that were intact at that previous high back, it looks like August, have only been extended with this marginal new high. So we extend the lines just like that, and there's our new divergence. Typically, not always, but typically, the bigger the divergence, the bigger the ensuing correction. So my expectation would be if we can start to get some downside here and these divergences become confirmed, roll back over, these indicators turn down here, we'll probably take out those previous lows. And that holds true for the US as well, by the way, on those recent, I boxed in that range, the recent trading range over the last few months. I think ultimately, if we start to reverse soon, keep these divergences intact, I think there's pretty good downside potential. All right, EWI, Italy, Italy, there it is. There we had divergence at that point, and we still have divergence right now. Much bigger divergence there. There's your new divergence lines, and it looks something like that. So there's Italy. Forget about these lines. I need to clean this chart up. I'm going to add one right now. There's a very technically significant gap right here. That was right when the COVID drop started. Big old gap right there, and we're coming up to the top of that gap now, and that's also resistance there about 29.61. You can see a lot of reactions in the past along that level as well, so the case can be made again. This is a rally into resistance, overbought. Anytime this red line here is a 70 level on the RSI. Last time we were overbought, remember, it was coming off a very big washout move, but you still had a sizable correction on that overbought reading right there. It was pretty swift, but when you see overbought conditions, especially when the overbought becomes a little less overbought each time and gives you that negative divergence, which happened here, boom, that's when you get the usually get the big drops, just like you get these divergent lows that lead to the rallies. You can see the divergent lows there. So there's Italy at resistance, overbought with negative divergence. EWJ, Japan, we had, there's the divergence line gets moved up. So we had divergence at that point right there. I guess that was the last time I did the video. Now we have divergence right here. Japan has taken out that previous reaction high, but again, by a very marginal or small amount. If you look at them, referring to the high back there in early 2018 or so. EWQ, France. Again, common theme on a lot of these countries, not all, but a lot, especially the European countries, at or very near significant resistance. Every time, going back to 2017 here, late 2017, early 2018, every time EWQ rallied up to this level, about 33, it was checked, and we had a correction from there. So again, bullish if it can break it out, but it's not very common that you see a rally that's used this much energy to get there. And off the COVID lows, France rallied 75%, and just since the U.S. elections here, just recently, you had this super strong rally right there of about 27% over the last month or so. And so I would put very high odds that the upside is limited at this point. I mean, a best case scenario, I think, you consolidate, flounder around, work off the overbought conditions for a while. To see a breakout that just continues to run another 20-30% is, in my opinion, unlikely. It's possible, anything's possible, but unlikely. EWU, that is the United Kingdom, and at that point I think I highlighted this in the last video, this trading range here, and then this 28.33 resistance. Now we popped that 28.33 resistance. That's actually pretty bullish, and the thing is, we popped it, back tested it, and that was a target that I listed last month, I believe. Back tested it, and we're moving higher. So That actually England, it looks like, or the UK is playing a game of catch up here, and it has been because of course it's lagged behind many of the other developed countries, especially the G7 countries. You can see it's really lagged behind. Uh, so I'm not as bearish on England or the UK as I am on some of the others there. And again, no sell signals, and we don't even have divergence. That's the other thing. EWU has made a new higher high here on both the PPO and RSI. So there's one. Do with it what you want. Here's the thing. If the rest of the developed nations stall out and then start to correct, they're probably going to drag the UK down with them. That's just how it works. So whether you want to go long or not, but I can just say again, one of the better looking ones if you are a bull. And where would my next target be? Well, there's a midpoint right here I should put, but ultimately I think up to about 34, 39 there. If we can get a rally into year end and well into 2021, those are potential upside targets there. Me, I'm not buying the UK now. I just want to mention targets for those that are interested. EWA, this is Australia. Busy chart, a lot of lines. Again, I haven't updated each and every one of these charts in a while, but you can see right here, this was this level right here, about 24.15, and down here below, about 23.22. I'm showing you all the reactions. So those are big resistance levels. So really it's this 23.22 other than these two brief pops above, and that's where we're at right now. If you zoom in, you can see we're really right about where we were back here. Right before the COVID drop, that's where we've rallied back to. So now we've had a full retracement of the correction down into the COVID lows. That's right about where we're at today. So that's resistance. Traders look at those reaction highs. Should we get a little more upside in EWA, 24.15 is a pretty big resistance level as well. So again, I think the risk reward right now, despite the fact the trend is very bullish, the risk reward for entering new long positions, in my opinion, at this point in time, it's still unfavorable. FXI, China, one of the Chinese ETFs that I track, it's been mostly, at least for a while here, bouncing in this range, other than you have this exception. A lot of, the meltdown of the COVID lows, there was a lot of liquidation, panic selling. So if you exclude that brief dip below, there's a lot of reactions on there. And there were quite a few reactions from above here as well. And we broke out. And I believe in the video before the last one, I mentioned that China is looking as my most bullish looking country out of the other the international ETFs that I'd covered, and that was a while ago, and it's already rallied and had most of the gains that you were pretty much priced into the charts. Now, with that being said, negative divergence for the first time in a while. There it is. Divergent high right there. Here's an example of why divergences don't always play out. I like to leave some of these lines on to remind myself and others that, hey, they work off. I mean, there was a correction there, but then we put in a blow-off top, and that's what a blow-off top looks like. Can't rule that out now in the markets, but we had one in gold back about 4 months ago when I was expecting to pull back there. That was a blow-off top in gold. That was a blow-off top in FXI right there. But either way, we're at resistance. It's about $49 right now with negative divergence. So there's another one that would probably have a nice correction should the U.S. markets and some of these other markets that I covered start to correct. GXC is another Chinese ETF. There's that blow off top. I guess at the time I put question mark boxing it in, and sure, it certainly proved to be a blow off top. Here's a recent breakout to new highs in GXC, but a new highs with negative divergence, pretty strong divergences. So therefore, I suspect these new highs will ultimately fail. You can draw a wedge-like pattern right there on GXC. And targets, I'd have to sharpen my pencil and update this chart, but probably come all the way back here to that 105.75-ish level ultimately. CWI, this is a combination of various countries, so I'm going to skip over that one. Here's Russia, RSX. Let's look and see what Russia's doing. Russia, like everything, almost everything else, has now put in a marginal new high, and I'm again referring over the previous high right there. I mean, there was our probably all-time high, or at least multi-year high in Russia before the COVID lows. But just like so many of these countries that I'm covering, we are overbought. Here's the RSI at overbought levels with negative divergences, as I've just drawn here. The divergences that were in place before during this correction have now only expanded. And not only that, as I said, with the U.S. markets, you have the divergence, but you don't have any overhead resistance. Well, on most of these other countries, you do have, and there's good resistance right there, about 24. So I can make a case in Russia to short it around $24 with a stop, again, depending on how much downside you're looking at. You want a quick pullback trade, you want a tighter stop. You want to swing for the fences here and go for a lot more. Well, then you can allow yourself a wider stop. EWY, South Korea. What was those divergences? Was last time I updated it, but those divergences continue to build. This looks like a blow off top here. It's a near parabolic move right there going on right now in South Korea. There's a steep uptrend line. You'd probably want to zero down to the 60-minute charts if you're going to trade it. There's your divergence. No sell signals yet, like so many other things, but coming up at resistance because you have a previous reaction high from back here. Actually, it's just taken that out, and that is probably what I refer to as a momentum fueled overshoot. We'll know for sure if we fall back down below that 79-ish level, but today we popped above it. And again, when you have a lot of upside momentum carrying a stock or an index, whatever, that's what you often get, those momentum fueled overshoots of resistance followed by a snapback. And if we do snap back, we'll probably take out that trend line too. Where would I target? I'd target about 71, a little around $72 would be a target, and probably also this trend line here. So they should come in together if we get a correction soon. And what would that be? South Korea would drop by about anywhere from about 12. Again, depending on when it gets there, if and when it gets there, 12 to 14%. EWH, Hong Kong, at resistance. I haven't touched this chart in a while, so I've had this line here about 24.30. And not one of my favorites for a short, that is. And again, I wouldn't be going long only because of my outlook for most of the other countries right now. I think there's better fish to fry. You can either actively trade the U.S. markets. Individual stocks are still, what's where the real money is, like some of the trade ideas I've highlighted recently, and then other assets, gold. I'm still, still coffee. I'm still long coffee. I'll do an update on that soon. But other things, just not feeling the indexes right now, despite the the fact that the U.S. markets are at or near all-time highs. Okay, I have quite a few ETFs in this watch list of global markets, but I'm not going to go over them all. We'll only cover a few more and wrap up. This is EWT, Taiwan. So, look, because I've covered a couple of the other Asian markets. Big divergence. Here it is. You diverge, correction. You look for these positive divergences or divergent lows, rally. Look for these divergent highs, correction. And that's a pretty big, very clear divergent high right there, and a lot of hot air in Taiwan to come out of if and when the tide changes here soon. What other ones do I want to cover? Let me just take a quick look. Vietnam, VNM, approaching resistance around $17, getting pretty close with divergence if and when it gets there. So there's one again, limited upside, if any, in my opinion, at least in the near term. That's emerging markets. Actually, a little breakout there, but at resistance as well. EWM is, EWM is Malaysia. I thought it was a different one. So there's Malaysia, another Asian market at resistance right there, and actually it broke out of this symmetrical triangle. I think I might have highlighted that in the last video if I covered it. I imagine I did. Can't recall offhand. But now I just moved that line there, and there's our divergence line right now. So that's the story. We'll skip forward, and I'll wrap up with, let's just do Greek. GREK, that's the Greece 20 ETF. And what stands out here, well, you had divergence right there, and you had a nice healthy correction from it. and we've rallied right up to, and I have not modified this level in a while. 25.19 is a resistance level I've had on this chart for quite a while. You get a big old gap right here above there, reaction, another gap right there, reactions on it there, reactions, reactions, reactions. So that's the story of Greece. No divergence, but very overbought right now. And like everything else, if the rest of most of the other economies or markets turn, so will Greece. All right, we're gonna wrap it up here. I'll get the video out to you guys, and like I said, I'll do an update. We don't have the hard sell signals now. We'll watch the U.S. markets. If they turn down, you'll probably see everything else go with it. And if they don't, they continue to flounder around or continue to push higher for the next weeks or coming weeks or months. I'll continue to post my thoughts, and of course any significant developments. But when you're looking at these daily time frames, the developments are slow and can take months to pan out. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great evening.